Well, this 10 Mil Club deep dive, we're going to talk about Archer Daniels Midland stock because someone named John Benefits mentioned it and called it undervalued. So, John, I don't know who you are, but you are my favorite person of the week because you gave me the gift I always want, which is something to think about. First off, who is the 10 Mil Club? The 10 Mil Club is an informal group of people who are generally guided toward trying to get to $10 million worth of net worth, because we believe that while money won't necessarily buy you happiness, that level of worth will get us to the point where we can pretty much be free to do kind of anything we really would like to do. So that's the 10 Mil Club. A couple of disclaimers: nothing I say in here is financial advice. I am at best a hack. I do have a lot of letters after my name. We go into the answering of John's question here, the valuation of Archer Daniels Midland. This is not a real valuation. I actually do hold a business valuation designation and a real estate valuation designation. This would not qualify under the uniform standards of professional appraisal practice, the standard code and standards of any of the valuation organizations to which I am beholden or at least aware. And just, I'm not showing all of my work. So don't rely on this. At best, as I say, it's a back of the napkin sort of draw out in the booth at the Waffle House. So take it for what it's worth. But with that, we're going to go. Someone contacted me this week who goes by the Facebook handle John Benefits. And John wrote, undervalued company, Archer Daniels Midland, ... upward price graph here. And I love it when somebody writes something like that because it gives me something to think about. John, I hope you're listening. I hope I hear from you, because truly you gave me the gift that I always want this week. And so I posted, will you please show me your valuation to support that claim? To which John wrote, I'm betting on the biofuels they produce. There's an increasing demand for it going into the future. This is a long-term hold. I'm not betting the farm, but I still think this is one of many undervalued companies, which didn't answer my question. He didn't have any. I mean, I'm guessing that's called redirection. It answered a question I did not ask, and we're going to zero in on what that question probably should have been and what the statement probably should have been. But John Benefit, I love that last name. Obviously, it's not John's actual last name. I believe his name's probably John McCormick, probably because John McCormick is up here. But I loved this. His background on Facebook is the printout of an IQ test, which shows 119. And I had to go look that up because I didn't know. But the Wechsler IQ classification, 119 is the very top end of high average. So well done, John. You probably have me beat from an IQ standpoint. But what that does is it means that you are smart enough to block out your actual last name right here, but not smart enough that we wouldn't be able to find it right here, but smart enough to put your Cash App signature right there so that if we want to send you money, we can. So high average. I love it. Absolutely. So let's dig into Archer Daniels Midland. I'm not going to read everything that's on every slide here. That's kind of up to you if you'd like to stop the video and take a look at it. Archer Daniels Midland, though, is in an industry subgroup called agricultural products and services. And it is far and away, if you look at the market capitalization right here, the largest in that segment. The next closest is this company called Bunge Global, which is a full $10 billion smaller by market capitalization. It does have a net income that isn't too terribly off, but its market capitalization is much smaller by size. And after that, after those two companies, you have to get into mid-cap and small-cap companies. The sector itself is really interesting because Archer Daniels Midland is really the king of the sector as far as market capitalization is concerned. As goes the sub-industry, so goes Archer Daniels Midland stock. So this is 2 years of the agricultural products and services sub-industry. You can see the shape here. If you simply hit Archer Daniels Midland's stock price movement, essentially it's just a very high correlation with the sub-industry. And as you go to Bunge, which is next, you get a little bit lower correlation, and then Darling, which is again a little lower correlation, and then you get things that really only kind of look like the segment at all. And we're going to talk about those different things, but basically Archer Daniels Midland has captured the sector because of its size. So you need to know that. This came off of Archer Daniels Midland's website. I love this because this is a perfect example of corporate spin. Archer Daniels Midland is constantly buying and selling different companies, assets, getting in and out of lines of business. They just do it. But this, I thought this was hilarious. So everything they've sold is down here in these little blue letters. Like, yeah, we got out of Bolivia Oilseeds. Yeah, we got out of Crop Risk Services. But what they bought was Aston. And they bought Herbal Latina. And they bought Plant Plus Foods and Rovella. And so all these things up here, all of these things they bought, they're big icons for you to see. Whereas down here, I mean, we got out of CIP, and yeah, it's just gone. Brazil Sugar, not anymore. They are in a lot of stuff. They're a really big company, but mostly they're an ingredient company. They have some arms and things that don't have anything to do with agriculture or food, but mostly they're an ingredient company. You eat stuff every day that has Archer Daniels Midland ingredients in it. So real quick, let's just take a look at Archer Daniels Midland's quick screen. So here we are. There are a lot of numbers on this page. You don't need to stick with all the numbers on the page. I just want to walk you through a couple of things as far as how this company's fundamentals screen. This top set is over the last 10 years. This bottom set is over the last 10 quarters. I'll go over a few of these things. I really just want to focus on a few lines. If you look at 10 years worth of their weighted average shares out, Archer Daniels Midland has a way of buying back shares and returning value to you as a shareholder. They started about 588 million shares. They buy back shares. They buy back shares until finally, they actually went up a little bit lately, and you're welcome to stop the video and take a look at this if you'd like. But we're down at about 484 million shares from 588 million shares, which is down about 16-17% in shares. So just by sheer share amount, they've increased some value to you by doing the opposite of dilution, unlution, I guess you might say. But by revenue, they climbed up into the pandemic, and then we had this really crazy year that ended in fiscal 2022. And after that, their revenue has declined all 3 years since that 2022 fiscal year. That, I believe, is the driver of why their stock, we're going to go to them right here. If we look at them for a few years, I'm going to pull up 5 years of them here. That, I believe, is why their stock did this run down. They kind of do a head and shoulders pattern over a long period of time here, and then do this run down, because if they're not going to have growth, this has been a growth-driven market up until lately. If they're not going to grow, then things are going to go down. But the problem is we end up around this area, and the drumbeat for a recession just gets to be too terribly much. And this is probably the most important point of this entire video. Good companies, or at least companies that are almost guaranteed to not fail because they're really, really big. They have plenty of products. They have plenty of profitability. They would only fail in the absolute worst of circumstances. Those companies will have a tendency for their price to turn around on a technical basis long before the fundamentals actually show it. I've read about it in books. I've studied it, but honestly, to see it on a screen is a very different thing. And there it is. You just simply get to the early part of last year. And all of a sudden the market just goes, hey, Archer Daniels Midland, that is pretty low. But I think that lack of growth is really what drove that share price downward movement. Gross profit ratio doesn't really change a whole lot. 6%, 7%, 8%, back to 6%. Neither does operating income ratio, 3%, 3%, 4%, down to 2%. Neither does net income ratio, 2, 3, 4, down to 2, and even 1% on this last year. So you don't have a company that is increasing its profitability like crazy. Now it is buying and selling a bunch of businesses and things, but it's not increasing its profitability like crazy. You do also have a company that generally covers its interest very well. Back here in a lower interest rate area, they cover their interest a lot better. 4, 5, even 10 times here where interest rates are extremely low and debt is extremely cheap. Lately, they've had a bit more trouble. They haven't gotten out ahead of paying that debt down. And so while they have been buying back shares, they kind of stopped doing that, and it hasn't really shown up yet as far as the interest coverage improvement. So they also risked up the company. That would also send share prices down. If we look at the last 10 quarters, we are now down to 484 billion shares, which is lower than it was 10 quarters ago. The gross profit ratio actually has decreased a bit, as has the operating income ratio, as has the net income ratio, as has the interest coverage. So we don't have a company with fundamentals that have really turned yet. But like I said, the price will turn before the fundamentals do. We saw that with trucking companies late last year. You'll see it over and over and over again. That's the general scan. If you do that for everyone, Bunge here is the next biggest company. It's about $10 billion in market capitalization, smaller than Archer Daniels Midland. And then you have DAR and INGR. And after that, you kind of go off a cliff. I believe Fresh Del Monte was next, but you kind of go off a cliff. You can actually see that from a profit ratio standpoint, you have more profitable companies than Archer Daniels Midland. I looked this up. I checked into that bit of data. I believe that is true. I believe that that company really does cover its interest by 27 times. They just got out ahead of their debt, and that has been improving if you want to run one of those scans on them. This is interesting. These two metrics here, free cash flow to equity and free cash flow to the firm, those are ways to calculate how the firm is actually getting cash. Free cash flow to equity, to be clear, Archer Daniels Midland actually has higher free cash flow to equity now than they did 10 years ago. It's just that the compound average growth rate is negative. Free cash flow to equity can be a weird number because there are things that can affect it that don't have a lot to do with the operation of the company, but it is still important because you are the shareholder in the company, not the owner of the company, and there is a difference. Free cash flow to the firm is a bit more positive for them. Bunge, I believe Bunge's cash flows are positive on both, have increased, but I think again it's the compound nature of the growth rate. But again, you have companies that are a bit more steady, that have better growth, at least more steady growth in their cash flows, and you get a 6% dividend or so with Archer Daniels Midland. One thing I do like to check is the ATR, or the average true range, as a percentage of the share price. The average true range is a technical indicator. You might want to Google it without me going too deep into it. It's a measure of the amount of distance in price that the stock might move in a day. It is a little more complicated than that, but that's the general nature of it. If you take that and divide that by the share price, you end up with the ATRs of the share price. All of them relatively similar. Archer Daniels Midland actually has about the same as its next two. Interestingly, this company right here, INGR, actually has a lower ATR as a percentage of the share price. Just kind of an interesting point there. kind of where the rubber meets the road. There are a lot of numbers on this page. I am not going to go through all of these numbers, but it's 10 years worth of the price to revenue multiplier and price to EBITDA multiplier for all four of the companies I decided to include in the analysis. And again, I am not showing all my work here, but by year, this is the high and low price to revenue multiplier, high and low price to EBITDA multiplier. I did go, for those of you who are brainy and want to know, I did go check the coefficient of variation on the different levels of income. It was very, very similar between operating income and free cash flow and everything else. And so I went with the classic EBITDA and revenue multipliers. The point being that if you value the shares and you take the company's own price to revenue over the last 3 years, you go with a high and a low, you end up with a share price range between $51 and $72.84. Now, as I wrote this morning, the share price of Archer Daniels Midland was $73.23. I can actually tell you precisely where it is right now. It's at $73.20. So pretty close to where it was this morning. So by revenue valuation, that's the range. By price to EBITDA, this is the range. That's their own high and low over the last 3 years. I'm using 3 years because they're buying and selling a bunch of companies. If we go back in time, now, truth of the matter is, though, if we go back in time, we actually find out that their revenue multiplier really doesn't move a whole lot. And their price to EBITDA multiplier, really, it moves like we get into those really super low interest rate, high capital thrust areas, right as we're in the teeth of the recession. And then we dive a bit, and then we recover a bit to these very same levels that are back over here. So Archer Daniels Midland's multiples really, they don't fluctuate all that much between a pre-pandemic era and a post-pandemic era. And really kind of, you have fluctuation on these other companies and things, but 6650, 8760, 5638, not a lot of movement there. You can see BG's really doesn't move all that much. And so basically the way it works, if we take, now when we start valuing a company based on comparables, you're introducing some things that may or may not be desirable. For example, Bunge Global took part in a really, really large merger last year. And so the market is still cheering that, and the shares are going up. Darling announced a joint venture as we closed out late last year, and the market's still cheering that, which is why Darling has a lot of upward momentum. Archer Daniels Midland is buying and selling companies, but each one is a much smaller percentage of the company than Bunge's large merger and Darling's joint venture. So you need to understand that when we start valuing things, I even trim it one time to try to take the high and low out. And by revenue, we get this really super wide range with a midpoint like that. By EBITDA, though, trimmed one time, we get this wide range with a midpoint like right on top of where the share price is right now. So the only way to believe that Archer Daniels Midland is undervalued would be to base it on 3 comparables that are not like it, trimmed one time, and only use the price to revenue multiplier, which would really not be reasonable. Valuing it against itself and its history and valuing it against an actual income metric, it's really about fairly valued, to be honest. Now, here's the thing about Archer Daniels Midland. And I just, again, John, thank you so much for giving me something to think about, because this is the stuff that the 10 Mil Club really thrives on, is having something to think about. You probably didn't mean undervalued. You probably meant that based on the biofuels and things that you think about, it's probably a good investment in the future. Maybe you think there's a lot of share price rise that is potentially going to happen over the next little bit. Maybe you think it's a good addition to your portfolio. Maybe you think that the share price will rise in excess of valuation that would result from simple year in and year out GDP. Maybe those are the truth. But Archer Daniels Midland being undervalued right now is absolutely not the case. But I appreciate you giving me something to think about. That's the weekly deep dive. We did it on Archer Daniels Midland. Please consider subscribing to our channel at this point. We have some subscribers. I hope all of you are listening. I love hearing from you. Please leave me a message, but please hit the subscriber button. And as always, we will see you on the next one. Got a penny stock spotlight coming up on Hertz over the next few days. We'll see you then.